Hey all, welcome to Share Trek. This is Raj here. Friends, today I have got an interesting story to tell you, and especially this will resonate with those who are shareholders of Illumina. Today I want to talk about how a mature management handles decisions. Yes, I'm harking back to the Illumina and Grail debacle. There's a valuable lesson here in this video, so please watch it till the end. I'm going to give you an example of how a merger is handled right, and I'm going to contrast that with how Illumina handled it. Let's get started. Welcome back, friends. We all know how a high-flying company called Illumina is quoting at its all-time low share price of just over $158 and a few cents as of today. Firstly, a very cocky CEO decided that the FTC and EU competition authorities are non-entities and proceeded to acquire Grail despite their explicit warnings. Then he continued to fight the FTC and competition authorities in the court, and when EU levied a fine of more than $425 million, they made a reserve and still continued fighting. And that's when the activist investor Carl Icahn caught sight of Illumina. Looking at these proceedings and noting the steep fall in share price, he decided to intervene. Carl Icahn is generally drawn to these situations like a bull to a red rag. This led to the chairman of the board losing his seat in the election, and a few months later, CEO D'Souza threw in the towel and resigned from the company. All the while, the Illumina management, in my opinion, did not respect the shareholders' interest, as the shareholder value steadily crumbled and lost significant value. From the lofty heights of around 500 plus per share, it has fallen down to around 138 odd. So it's not looking good. Even today, they have not yet given up Grail. So go figure what's happening out there in the company. The share is at an all-time low in its history. Now let's look at Microsoft. I have a table of events here to show you how a professional company that respects all the stakeholders conducts itself. Let's go through the sequence of events. I created this table so that I can present to you in a very succinct manner how Microsoft went about doing the acquisition, and it didn't take them so long. It didn't take them as long as Grail has been languishing. January 18, 2022 is when Microsoft started by announcing its intent to acquire Activision Blizzard for $68.7 billion in cash. Under the terms of the agreement, Microsoft would own Activision Blizzard Entertainment and King under the Microsoft Gaming division as a sibling to Xbox Game Studios. The acquisition would give Microsoft owners ownership of franchises including Call of Duty, Crash Bandicoot, Spyro, Warcraft, Starcraft, Diablo, Overwatch, and Candy Crush. If approved by the international regulators, it would have been the largest video game acquisition in history. Sony publicly argued against the merger, expressing concern that the combined company would make games like Call of Duty console exclusive to the Xbox family and thus deprive it of its business. So that was a major concern. And in order to address that concern, Microsoft and Sony went into a binding agreement to keep Call of Duty on PlayStation for 10 more years until 2033 after the merger. So you can see the spirit of accommodation, the spirit of reasoning, and also the respect for shareholder value. Next, there were several countries who decided to approve the merger with Sony being on board, including the European Commission and China. However, the US Federal Trade Commission and UK's Competition and Markets Authority filed complaint to block the acquisition, citing concerns about competition, particularly in the cloud gaming sector. And therefore, Microsoft responded by committing to offer Call of Duty and other games to Sony and other platforms for a decade to reinforce their commitment towards Sony. And they also agreed to sell the streaming rights of Activision Blizzard games to Ubisoft's gaming service, Ubisoft Plus. Ubisoft is a French company, and its shares went up almost 7% on this news. and they're going to allow Ubisoft Plus to have this for 15 plus years, so that CMA can give them the go-ahead for this acquisition. And on July 2023, the FTC formally withdrew its challenge to block the merger after failing to obtain injunctions. And currently, the Competition and Markets Authority of UK is reviewing this case. This deal is worth $69 million. And Microsoft and Activision agreed last month to extend their merger deadline by 3 more months to October 18 to allow more time to come to an agreement within the CMA, because the CMA is still debating everything, and with the latest concession given as per the requirement of CMA, they want to allow CMA enough time so that within themselves they can have a discussion and decide to approve. October 18, 2023 is now also the statutory deadline for a CMA decision on the new merger proposal, and Microsoft said it expects the agency's review process to be completed ahead of that date. So friends, as you can see, Microsoft is now among the stocks that have enhanced their value even in this difficult market, and it's one of those stocks which is very close to its all-time highs even now in this difficult market. And the other thing Microsoft did is also, it's forward-looking. Just because it's acquiring Activision, it did not drop the ball elsewhere. It went ahead and launched ChatGPT, and it is improving its cloud offerings. So Microsoft is doing all the right thing. It's a textbook case of how a good management takes care of everything. It can walk and chew gum at the same time and maintain its industry leadership, maintain cordial relationship with statutory authorities, keep on making value for shareholders and other stakeholders, and provide a stable environment where employees feel secure about their job and their career prospects. So running a business is something that has to be done with a great deal of humility, because a CEO has got to be humble, has got to take feedback where it is necessary, and do all the right things to balance the stakeholder interest and shepherd the company along with its stakeholders in a positive direction. I personally feel that Illumina failed in that aspect when it comes to managing the business overall, and as a result, the stock market has punished them with an all-time low rating of their shares at this point of time. So this, my friends, is a cautionary tale, and I have Microsoft in my portfolio. It's been in my portfolio for quite a while, and it's still positive. It's a green stock in my portfolio. I love the management the way it is. Even Google, Apple, these are all companies which have very professional management, and they take a lot of care when they make any decisions. You also see, on the other hand, I'm going to be a bit critical about X as well. After taking over Twitter, that whole company, the brand image that was built all over the years, for which Elon Musk paid $4 billion, he just discarded the Twitter brand name. Of course, he is a private owner. He's owning the company. He can do whatever he wants. It's his interest that he's taking care of. There is no shareholder involved in it. But you can see how the stature of the company that was Twitter has changed, and how its business share of the business or the market has diminished, and how its reputation has changed. So everything depends on the management. So as genomics investors, I think we have to put a lot of emphasis on who the management is, how good the board of directors is, how good the CEO is. In this respect, I think I have 100% confidence on CRISPR Therapeutics, because I think that CEO is doing a great job. And also Caribou Biosciences, it's a very, very stable ship. So there are some of these companies which have demonstrated already that they can steward the company very well. And those CEOs are doing excellent. And I think that's going to be worth a lot in the stock market. It's also another component of valuation of a company. And I wanted to contrast Illumina with Microsoft, even though they are not in the same area of business, but they are businesses quoting in the stock exchange. They have the same structure, corporate structure, that is required to be there in order to be in the stock market. they have the same obligations to the stakeholders, and they have conducted themselves very, very differently. Yeah, Illumina is still profitable in terms of being able to report positive earnings and surprise on revenue. But overall, I think the future of Illumina depends on how well they handle the Grail issue, and they could take a lesson here from Microsoft. So friends, that's the story I wanted to tell you about today. And I hope you enjoyed this video. And if you did, please do not hesitate to press a like there. And friends, if you have not yet subscribed, please subscribe. What are you waiting for? Help us touch the 5,000 subscriber mark. It will be a new milestone. And as we draw closer to 5,000 subscribers, I'm going to be working on a raffle so that one of the lucky winners can get a prize. So with that said, I think I would like to bring this video to an end. And yeah, one more request. If you are interested in supporting this channel, please consider pressing the join button, which is at the bottom of the screen out here. It helps you to become a member of the channel, and it will be much appreciated. Thanks and have a great day. Bye for now.